Well, this is a week that many investors would probably like to forget. One of the worst in years for the financial markets. But if you're an average investor or just a family saving for your kids' future, how can you make sense of it all? So joining us right now to help us sort through all of this, we welcome Senior Investment Advisor Allan Small. Hey, Allan.
How are you?
With all of this volatility, what's your number one message to people watching right now?
I think the number one message for individuals is not to panic. I think the first thing is whenever you see markets fall as quickly as they have, roughly 10% in the last few weeks, the first, feeling that investors want to do, the first thing they want to do is sell or call their advisor and panic. And obviously that's never the right thing to do. The market is just trying to price in what's happening right now. A new environment, higher interest rates, higher inflation, and unfortunately a bit of a trade war between the U.S. and China.
Okay, so these are some of the factors, but why the big market downturn?
Well, I think, as I said, I think what's happening now is you have a new environment right now with the markets. I think the days of double-digit growth for many investments and many investors, I think, unfortunately, is in the rearview mirror. With inflation and interest rates rising, with a trade war between the U.S. and China, investors are now trying to take a look at their portfolios and trying to make sense out of it all. Valuations are coming from all-time highs. Just a couple of weeks ago, we saw all-time highs in North American markets, primarily in the U.S. And so with these high points and what we're seeing, going forward, which is a bit of a more, more difficult environment for investing, I think a lot of investors wanted to take some money off the table. And now we'll see what goes on going forward.
Okay, so where is all the smart money going right now? And
that's a great question. And I think a lot of individuals, they're just taking money from their winners and putting it on the sidelines right now. We're not really seeing it moving anywhere. You would tend to think you would see more moving into the bond market to be a little bit more safe, but we really aren't seeing bond yields fall, and that's what you would see if a lot of money was rushing into the bond market. So I think the money is just on the sidelines right now, hopefully waiting for an opportune time to get back into this market, maybe after the midterm elections in the U.S. I think that's when you could see some money maybe flowing back into this market.
Okay, with some portfolios are going down, interest rates are headed up. How wary do we need to be at this time?
I think, we definitely need to take a look at our portfolios, try and figure out, are our portfolios today, can they weather what's going to happen in the future? This volatility. Are you nicely diversified? Do you have good quality names? I think a lot of investors over the past maybe 12 to 18 months, perhaps they maybe started to chase some of the higher momentum names, maybe some of the names that have been moving up significantly. I think you want to get back to a good strategy, a sound strategy, buy good quality names. Hopefully, if they pay a dividend, that would make a lot of sense. But to continue to diversify your money, make sure you're not heavily invested in one area, because as we know, diversification is the key to any investment portfolio.
Right, and you were saying that this could be the worst month we've seen in many, many, many years, and the world is just changing so rapidly.
I think so. Statistics are telling us that this October could be the worst we've seen since 2008. And again, I think it's because investors are trying to grapple with the idea of higher interest rates. Businesses are grappling with the idea of higher costs. Interest rates are going up, which means investment is a lot more expensive than it was. Mortgage rates will be a lot higher for many people with variable rate mortgages. So this is a new environment we're heading into, from an environment where we saw interest rates at all-time lows. So things are changing. Investors have to get used to it. I think once they do, this market continue to go higher. So I don't think it's the end of the bull market, but I think it's going to be a bit of a bumpy ride, at least in the short term.
Right, and your advice right now, just don't panic.
Don't panic. Stay cool. Let's see where the market goes over the next week or so, heading into the midterm elections in the U.S. I think that could be a major turning point. We'll see how it goes.
All right. Allan, thank you so much for joining us. Have a great weekend.
Thank you. You too.
Happy Friday.